All right, welcome, welcome, welcome. I want to make sure that everybody's getting signed in here. I can see here on my screen that we're getting folks that are logging in. So I want to thank you for joining us tonight. You know, right now we've been going through quite a bit. I think that all of us, it's safe to say that when we look at it, there's a lot of uncertainty around us. It kind of reminds me, I can remember when we moved down to Florida a few years ago. My wife and I were cruising down the road. It was about 12:30 in the morning. We'd been driving for almost 18 hours when all of a sudden, bang, the tire blew out on our U-Haul. I don't know if you've ever had this happen, but going 75 miles an hour down the road and the tire exploding wasn't exactly an awesome experience for us. We were swerving around. I was trying to get over to the side as quick as I could, and I got out. The side of the truck was blown off. I was worried about our stuff, and I was sitting there thinking, holy cow, I wish I would have took the insurance. What's covered? That's what we've had that happened for a lot of us when we woke up in February and in March, that we were sitting there, that we kind of got hit out of the nowhere, and we were left going, I wonder if I'm covered. I wonder if I'm going to be okay. So that's why I wanted to make sure tonight that I'm coming to you to be able to share this information. Why is it important? For a lot of you guys that are watching this right now, you're really close to or have just retired, and you're trying to figure out, is my money going to last? Am I going to be okay? Do I have to go back to work? My mother's in this situation. A couple years out from retirement, and she's asking me these questions saying, do I have enough? With what I've lost, am I going to be able to recover? And can I still stay on track for my retirement? So I want to make sure to share with you, the same as I would with my mother, exactly the steps that you can take right now to be able to make a difference when it comes to your financial future. So as we're still waiting on folks getting logged in, I just want to get a quick hello from everybody. So in the messages down below, if you can do me a favor, just type in where you're watching this from. All right, so Orlando. Okay, it looks like we've got Winter Springs, Oviedo, Orlando. Oh, thanks, Susan. Okay, yeah. It looks like we've got a lot of Orlando, a little bit of Claremont. Okay. Mineola. All right. So thanks so much, guys, for sharing that so that we make sure that everything's working. There's going to be times throughout this presentation for you to be able to respond either to a questionnaire to the side or in the comments. So we can just make sure that we're keeping this fun and interactive for you guys, for me, so that we can spend our time together tonight and get some information out of this. So without further ado, I'm going to go ahead and get started into the meat of the presentation with this. First, let's make the lawyers happy. So this is with their disclaimer. Just want to make sure you know the information that I'm sharing with you here tonight. This is designed to be able to help you out with what's going on, give you some ideas, but I got to caution you, don't take action on those ideas because I don't know you, your particular situation, and what's going to be the best fit for you. We do work in an environment where I want to make sure that I know you individually and your circumstance. And in fact, at the end of this, there's going to be an opportunity that you can actually click on to schedule a 15-minute conversation so that we can help you out with more of your individual questions. So if I look at what's going on, I told you we're going to go over 3 ways to take back control of your financial future. A lot of you guys were left feeling the same way as I did, swerving around on the road in that U-Haul full of our entire life, going, holy cow, what's going to happen? So when we look at the last few months, a lot of you guys, it's kind of been like this, what exactly do we do? If you were looking to be able to sign in tonight to get some questions answered and you said, hey, I just want those individual questions, you can go ahead, you can click the link to the side. I've got it popped up. You can schedule a 15-minute phone call. If your main thing is you want to make sure to get answers to your individual questions and help out before we really get into the meat of the presentation, you can click that. After you do that and you're scheduled, if you want to keep watching, fantastic. I'd love to have you. But if you say, hey, that's going to answer my questions, that's okay too. We want to make sure that we're here as a resource to our community here in the greater Orlando area, Central Florida, with that. So definitely take advantage of that if that's something that's important to you. Now, what's this conversation going to be? It's 15 minutes to cover what's important to you in your world. It is not a sales pitch. It's not that we're going through anything with that. It's simply that we're saying, hey, what's on top of your mind? What can we help with potentially? And do we want to maybe work together? From that, we can schedule follow-up conversations to be able to go deeper. All that you got to do with that is you schedule through. It's going to take you straight to my Calendly link, so my online calendar, so that you can see what's going on, and we'll just schedule that phone call together so that we can help out. Maybe it's that you lost your job, you're trying to figure out what to do with your 401k, you're trying to figure out with the recent market losses and the volatility, or hey, you just want to know, depending upon who becomes president, what does that mean to my retirement accounts? Tonight, what we're going to cover is these three main points. So we're going to take about 25 minutes to go through and cover this. So we're going to go through quickly. We're going to be aware of your time. But I want to make sure that we take a look at where we are right now and how did we actually get here. But most importantly, where could we go from here? And that's going to be based upon some key indicators, things that we see that are out in the world. And finally, and I look at this, and most importantly, in my opinion, we want to look at what each one of you can be doing right now to help take back complete control of your financial future. No matter what happens, no matter who gets elected, no matter what the market does. I don't know about you, but it seems many people, they've grown pretty darn tired with feeling things are out of their control. I've got to wear a mask everywhere I go. I'm worried about washing my hands everywhere. Gosh, this is stuff we should have been doing along the way as far as washing our hands. But when we look at that, we want to make sure that you're excited to look to the future, not worried. So question number one, where are we right now and how did we get here? Guys, I don't think that I need to cover this point further. We all know that we just had a tremendous upheaval over the last 5 months. But let's just kind of give the Cliff Notes version with this. So if we look from December 8th to March 9th, what happened? Well, a little thing called coronavirus. And with that, it really started affecting us at that point. And now we fast forward, we're 5 months later, and where are we? We've had massive shutdowns. We even had the stock market, this trade floor that normally is full of hustle and bustle and everybody out there, they sent them all home. There was a period of time where no one was on the floor. Everything was done electronically. And during that time that all of this turmoil was happening, we saw days like a 13% drop. March 16th, it was the single fastest drop that the Dow Industrial Average had seen in its history. Fell 13% in one day. Well, that was a great record until just 22 trading days, the S&P fell 30%. So just to put that in perspective, $1 million invested for retirement, if you were directly in the S&P 500, you would have been down to $700,000 in just 3 weeks. So you were losing $100,000 a week. That took years for you to save, and it was gone in less than a month. Well, how quick of a drop was that? Market corrections or declines of 10% or more, they're certainly common, but market crashes of 30% or more, a little less common. What company are you in? Well, February 19th of 2020, 30% market drop. February 6th of 1934, and November 9th of 1931. Those issues happened during the Great Depression. So the company, as far as how quickly that drop happened, it was actually worse as far as the drop than the Great Depression as far as timing. So what else are we seeing? What's going on around us as we look at that? We're looking at staggering numbers of unemployment. Now, gratefully, a lot of people have been able to go back to their jobs. They just might be working from home. They might be in their guest bedroom, and that's now their new office. But people have lost their jobs. We saw companies here as far as theme parks laying off folks. We saw a lot of companies that have downsized, said that there's redundant positions. You might be in that boat right now and that's why you are watching this. You're just trying to figure out, what do I do? Where do I pull income from? First, second, third. How am I going to make this work while I'm waiting to find a job? I have clients that have been looking for jobs as they got laid off through this or let go. And they're telling me that they love me, but they just can't hire me yet. They've got to wait until we get through coronavirus. We have no idea when that's going to be, so we cannot wait with that to figure out what's going to be going on. The unemployment rates right now are skyrocketing. We're still seeing that, and we're seeing an uptick again as far as how much that's happening. So knowing what got us here, the second question is, where could we go from here? This is a question we've been getting a lot lately. When you see the election cycle kick up and all the political ads, people are wondering, what exactly is going to happen? What happens to the stock market? How is this affected? How about jobs? How about if we get another stimulus? If they actually pass this HILls Act? We're going to see how that fits in for us as far as getting through and getting actual money into your pocket. The reality is, if you ask 5 different people right now, you're going to get 5 different answers. Frankly, as far as I care, anyone telling you that they do seem to know exactly what's going to happen, I think that's a little suspicious. Rather, I'm going to just give you some best guess or pretend I have some psychic powers, and we're just going to look at the facts. So, number one, I think we can all agree volatility is ahead with this. Anytime we see an election cycle year, we see that the stock market reacts more as far as up and down. We're seeing a lot more volatility with that. And we've certainly seen it this year. If you look back to February and how quickly we lost money in the stock market, and then luckily how quickly we've seen things come back, the problem is we've got to know how reliable is that going to be as far as keeping things where they are. Are we going to still see that growth ahead of us, or are we going to see more of this sideways movement, not a lot up or down? It's just a kind of like a game of Pong. If you remember back in the 80s when you were playing, it just was back and forth. That's exactly what we're seeing right now. A lot of this has to do with what's called a volatility index. And this volatility index just basically measures the emotion and how people feel about things. And we already knew that going into the year, when we turned the calendar to January, we knew it was going to be more volatile, but not much more volatile than what it was. But then again, March came. With that. February, March came with coronavirus, and we're still dealing with that today. Why was March 27th important? Well, that's when we actually passed the CARES Act. That was injecting that stimulus money out into the economy to help things on. The president, the Federal Reserve, everybody involved has basically went all hands in to try to make things happen for you. So the government, we were already having $24.2 trillion of national debt. That's a 2-4 with 12 zeros behind it. It's a huge number. So we're adding another 2.2 trillion on top of that. As I speak, we're looking at pushing more money out. Taxes are going to have to raise at some point in the future, and all of us are going to have to pay up. It's going to be on our back. This that we're getting right now, don't worry, it's not free. It's going to be on everybody's back. And while you may not have immediate implications to you, it's going to be something that we're going to return to here in a minute as I go through this presentation. So what exactly is a recession? A recession, generally speaking, has been a significant decline in general economic activity. They normally say it's 2 consecutive quarters of economic decline, but here's the thing. They changed the definition of a recession. And in fact, we just entered into a recession officially with that. So when we look at that, the last few months, we can see what has happened and those around you, whether it's you, your neighbor, friend, or family member, people have been affected by this all across the board. So it's highly probable that what we're going to see is continued volatility. We're going to see taxes have to come up. We see that that's more than likely going to have to happen for the government to make things work. Many people think unemployment it's going to continue to rise. We had some decrease there. We had people returning to work, but now we've had those people get let go again. And with that, the recession that we've already entered into generally result in interest rate hikes over time. So not exactly a rosy picture, but we know where we're at right now. But what can you do to actually take control of that? So let's take a look at that final question, the one that matters the most, and that's what can you do right now to help take back control? In a time which so much feels outside of your control, the reality is your finances and the retirement you've spent a lifetime preparing for don't have to be one of those things. Those things actually you can completely control. So with everything that's going on, everybody's being fed by the media, which we think we'd all agree, I'm ready for them to move on to another story. You can either sit at home frozen, waiting for things to happen to you, or you can decide you've had enough of that and you can plant your heels and you can actually make things happen. So 3 things that you can do right now. So we're going to spend the next 10 minutes talking about 3 concrete actions you can take right now to not only help protect your financial future, but actually take advantage of the current circumstances. Because believe it or not, the current environment actually creates some key opportunities that you could be thinking about. So the first concrete step you can be taking right now is to determine your continued exposure or risk in the market. We've already discussed that continued volatility is highly likely throughout the remainder of 2020. Now, some of you might be watching and seeing this already. There have been days in which the market has actually had a nice little pickup, and other days where the market appeared to be doing well and then lost all of its gains before the closing bell. So, given the roller coaster, it's important that you know what portion of your retirement assets are still exposed to market loss. So, I'm just going to take a quick survey as far as everybody that's watching right now. Uh, just go ahead, and that survey, it's going to say with risk, are you confident that you know what risk you're taking on in your portfolio? So just do me a favor. There's the option you can put yes, no, or I'm unsure. Okay, I see you guys are responding with that, so thank you. All right, thanks, Mary. Thank you, Margaret. All right, Jim, fantastic. So it looks like you guys are kind of feeling like you're not really sure with that. That would look like the overall general consensus with that. I understand it. Most people don't know how to measure this. They've just invested in certain stocks, bonds, mutual funds, or they just clicked what they thought was the best thing in their 401k, but they have no clue what they're actually in and how that's reacting. So it'd be like if you took a lot of different medications and you had no idea the side effects and how they interact with one another. So risk can be one of these things that just having the one thing, not that bad, but mix it with other stuff, can be really bad. It can even be fatal. So we don't want that to happen to you. So given the roller coaster that we're on, it's important that you know what your retirement assets are exposed to when it comes to market loss. If you looked at your portfolios in March, how many of you guys remember seeing that you were losing 20 or 30%, or maybe you were even just afraid to log in to look? Yeah, I see that. Avadni, I appreciate it. Yeah, you were afraid to even log in. Yeah, it makes sense. We see that with people sometimes. I was talking to somebody yesterday. It's exactly what she said with that. Some of you may recognize this guy. Little bit famous. Warren Buffett, net worth $74.3 billion. Owns companies like Geico, Helzberg Diamonds, Pampered Chef. He's a busy man. He's one of the most famous investors alive, and he's currently the fourth wealthiest person in the world at that $74 billion. What does he have to say about market losses? His number one rule is don't lose money. He lost quite a bit this year because he had bet on certain things that just didn't pan out. So his rule number one was never to lose money. Rule number two, never forget rule number one. Why does he say that? Because when it comes to your investments, the losses hurt a lot more than the gains help, and it takes a lot to recover from a significant loss. So whereas if you lost 50% of your wealth and having that recover, you think that maybe you just need 50% more, the answer is wrong. You actually need 100% return just to get back to what you had before. He's always understood this rule. If you want to make money, you start by not losing the money. In March when the Dow dropped 13% and the S&P dropped 30% in the weeks that followed that, we were on the phone with our clients, not because we were scrambling, worried about, oh my gosh, what are we going to do? It was because we wanted to make sure that we were in front of people. We were simply reaching out to remind them of their plan. See, we're a planning first practice. We work with people to be able to help them out with putting together a picture and a game plan, a roadmap, if you will, as far as what they need to be doing and how their investments are going to react. And because of that, overall, we didn't have people that were panicked and worried. We could always call back to the game plan and show them when the money was going to be used and how we had time for this bucket to recover, or even show the money that wasn't affected whatsoever by market loss. These were some of the best conversations I'd had in my entire career, of just being gracious as people calling, checking in on them. It was like calling a family member to be able to just say, hey, this is what's happened. And we had people saying, you know what, my sister or my neighbor, they just lost their job. They're trying to figure out what to do. And we were able to just say, hey, just share their name, email address, or phone number. I'm happy to reach out to them and give them the 15 minutes. The same as what's available to you right now tonight. And just help out with the questions that are on top of their mind with that. In times like these, you got to over-communicate. In my seat, we're sending out videos to clients. We're keeping them informed with our newsletters that come every single week. We're wanting to make sure that people know what is going on. If you haven't heard from your advisor, if you haven't felt like you're hearing the right things from them to be able to give you the confidence in what you have going on, that leaves pause for concern. Because right now, one of the most misunderstood aspects as far as financial advice is not what you're invested in. It's not the different accounts that you're using. It's the relationship and somebody that knows what's going on in your world. So why does it matter so much? Because you can remove the emotion from decisions like this. Let's say that you had that $1 million in the market and that 50% market decline we talked about earlier. Let's make it real. That 50% decline means you've got $500,000 that's remaining. And you think, okay, great, I just need 50%, I can get back to where I was. The problem is, if you got a 50% return as far as growth on that, you're only back to $750,000. You're still 25% short of where you were. So in order to get back to that full value, you'd actually need that 100% gain just to get back to your $1 million. How many years do you remember seeing your portfolio go up by 100%? Yeah, I don't either. That's why Warren Buffett feels so strongly about trying to avoid the losses, because those losses hurt more than the gains help. For those of you that you experienced that 30% loss in the market and you stepped out, you said, I can't take any more, and now you're trying to figure out when you get back in, that's the problem. Now you've got to figure out how to recover from those losses. It's a hard road, and it takes a lot of planning and effort to be able to get there. And how likely is it to happen that you can just accidentally do that? It's not a very strong chance. So the number one thing that I want to offer for you guys tonight is actually a completely free risk analysis. So whether you work with us or not, I want to offer this to you so that you can schedule, click the link to the side, that 15-minute conversation, and you can just, in the notes when you're scheduling that, put that you want the free risk analysis, and I'll complete this for you. We'll just look at your statements, I'll plug everything in, and we'll be able to tell you, hey, if we go through another situation like what we just did, how would your portfolio react? How much loss are you going to see? And are you okay with that loss? So if it shows that you would go through and you would lose 40%, are you okay with that? You can take action now before we have that happen again. I had a lot of people that I talked to that were new clients of ours that came from other advisors or came from doing it themselves during all of this, that when we first did this exercise and they had lost the money already, they said, if only it gets back to where it was, I'll never experience this again. I'll make sure that I actually have somebody that's helping me that's proactive. This is the first step. And we are in a market environment right now where a lot of that recovery has happened and you have a chance for a do-over. It's not often that this happens. Pretty rare, in fact. So we want to make sure that you're able to take advantage of it. You know, Uncle Warren has another saying that's pretty famous for him. You never know who's swimming naked until the tide goes out. So a lot of people didn't realize how exposed they were with their portfolios, with their plan or lack thereof, not knowing where they were pulling money from until this market event happened. You know, a global pandemic and a recession all at the same time is not a normal occurrence, but we have to make sure we're prepared for anything. And Warren also says it's insane to risk what you have for something you don't need. So we're not going to take on more risk than we have to. The clients we work with, if I'm showing that you're going to make it with a 4 or 5% return and you're going to have more than enough money and be able to do all the things that you want to do, then why are we investing in a way where we're chasing 10 and 15% returns? It's just not needed. We really don't need that in your life. So take advantage of that 15-minute conversation. Just click on that icon to the side. You can schedule that call. I'm happy to walk through with you as far as the questions that are on top of your mind. And some of you might be asking, what even is a risk analysis? Is this some kind of like 25-page NASA report? It's got all these numbers and facts and figures? No, this is really simple. One page. It's going to look like that on the screen to be able to determine exactly what would happen in different market conditions and how you would react. All right, so moving on, we've got action number 2, and we're going to minimize taxes wherever possible. You know, so with this, I know none of you guys like to think about taxes. Most of you, it's just whenever it comes time that you've got to either pay money or you're going to get money back, that's the only time that it really pops up. But this is something that should get you excited. This is where you can leave as much as possible to kids or charity instead of giving it to the IRS. We don't want to ignore this. This is going to be one of the most important steps for a lot of you guys. So anytime I bring up taxes, a lot of times people say, Andy, I'm happy. I've got a CPA. I've been using them for years. And I'm sure that many of you guys are in that same boat. But I'm not actually the one that does your tax return. I'm the person that helps out in working with your CPA to make sure that you're getting the most out of this. So not all CPAs are actually doing tax planning. A lot of them just do tax preparing. Looks kind of like this historian here. He's just going through and saying what happened in the past. We want somebody that's going to be proactive. Why do we want that? Because let's just look at taxes with everything that's going on, adding all the extra national debt by sending out the stimuluses this year. Do you think taxes are going to be going up or down? So just there in the comments, put yes if you think taxes are going up, no if they're going down. Okay, I see that you guys are responding with that. Thanks so much. All right. Yep, I've got you with that. Thanks, Jeremy. I appreciate it. Yeah, you think they're going up. Jim thinks they're going up as well. Brian, thank you. Yeah, I think everybody is saying up. I agree. We're seeing that was where things are heading. Some of you guys, the words on this screen, they're old hat. For others, it might be a little bit foggy, and you've heard these terms but never been 100% sure what they meant. But let's just make this really simple. When you save and it's retirement money, there's really two places you can save. It can be traditional IRAs or individual retirement accounts, where you're going to put your money in and it's going to be before you've paid tax. And those dollars are going to grow, and in the future you're going to pull money out and it's all going to be taxable income. The other option is you can go ahead and pay your tax today on your income, put it into a Roth IRA, a Roth individual retirement account. And the difference is here, it's going to grow and you're going to be able to pull out all the money tax-free in the future. So it's kind of like deciding, do you want to pay tax on the seed or do you want to pay tax on the harvest? So pay a tax on the seed is like going ahead and paying it on the Roth, and you let it grow tax-free. The harvest, you wait until you've got a full bounty, and then you decide to pay it on that. It's much more expensive typically. So if you've been making this mistake along the way and you're like, oh my gosh, how do I fix this? And the number two thing that you can do, it's actually called a Roth conversion. This might make sense for a lot of you guys that we can actually go through and see what would be the difference. What is it like to rip the Band-Aid off for you? So that report's going to look like this. You can get a complimentary Roth conversion review. We're going to go over what would be the difference if you just left it where it's sitting right now and let that grow over time. How much are you going to pay in taxes? Or if we were to rip the Band-Aid off, move this over to a Roth IRA, how does that look differently? You can see on the screen it might be hundreds of thousands of dollars of difference for you. Of money in your pocket that you can make a difference with on your kids, on your family. It might be for charitable organizations you care about. This is money that you do not have to give to the IRS if you do this properly. This is money that is difference that's in your pocket and it's totally legal. So if that's important to you, click that link to the side. We can schedule a 15-minute call, and be sure to put in the notes that you want that Roth conversion review. So I'm happy that we can cover that for you so that we can get through and take care of you and what's important. Number three, let's look and make sure that we've got a solid foundation. This is the third and final step we're going to be taking to take back control of your financial future. And this is what's going to make sure that your entire future is secure. We don't think of the parable of building your house on sand versus building on rock. We want to make sure that we're built firmly on rock and that this structure is going to last. I don't know about anything that I'm talking about that would be more important than this for our clients or people that are trying to make a difference in their future. So let's think about it. If you were to go build a house right now, you're normally going to have blueprints. You're going to have something that's absolutely critical to make this all work. And it starts with a firm foundation. You know, maybe you've built a house before, or maybe you're in the construction industry and you're watching this. It's just several walls of cement or cinder block when I was growing up. They dig down into the dirt, they get to a firm foundation, they pour that, and now they're going to build everything up on top of it. So all those fancy granite countertops, the clawfoot bathtub that you've always dreamed of, your big closet, the same's true for your retirement, that we've got to make sure everything else is supported by this. What's going to happen in the future if you haven't already retired? You work for 30 or 40 years, and then all of a sudden you wake up, and it's your responsibility to create that paycheck. It's no longer coming every 2 weeks. It's up to you. Social Security is not going to take care of this fully. You might be lucky enough to have a pension, but that's not going to necessarily take care of it fully. So you're going to be left with the difference from your own personal savings to make this happen. You know, most people just want consistency and predictability. I call it mailbox money. Most people just want money that shows up without worry or concern. This is why my school teachers are so happy when they retire, or government employees, because they spent a whole career giving service to everybody, and then now they're getting that pension. They're getting that guaranteed income that's coming to them, and they cannot outlive it. It's a fantastic blessing I've seen with that. But nobody wants to enter into retirement, and all of a sudden you find cracks in your plan. I can remember working with a gentleman a couple months ago, and he was pulling money from his retirement account every single month. But the advisor he was working with, there was no money that was ready to send to him. They were having to sell those positions every single month to be able to send the money to him. Why did that matter? Because in this period of time for this year, what did we see? We saw the market go down down, down. All the while, those months that it was going down, 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 he was still selling. He had less to recover. So he actually lost quite a bit of money in making that happen. Nobody wants to see this. So that's where we work together with people to develop a plan to make a difference so that that's not happening. The bottom line is you get one shot at retirement, and nobody wants a big surprise to their income when it comes to that. So let's pause here. Just respond to the side there, a yes or a no, as far as if you feel like you have a clear picture of your spin down plan. Where's the money coming from each year? And do you have that detailed spin down plan that's going to allow you to see that? So with that, if you just respond yes or no, I can see that you guys are doing that. Thanks. Okay. Sherry, yep, I've got you. Gail, yeah. Looks like a lot of you guys are unsure if you have this, or you're saying no. With that this is common. Most people are really good. Advisors are really good at helping you be able to climb up the mountain, and you grow the money, or you've done it inside your 401k yourself, and you felt like you've done a pretty good job, but now it's climbing back down the other side of the mountain. This is where it really gets real, because you're not going to go back to work. This is all of your money. We have to make it last. So when I talk about a spin down plan, a retirement income plan, it doesn't look like this. It's not a stack of everything that you need an interpreter to be able to go through. You don't need a day of healing after you go through it. We're talking about a actual plan, easy to understand. I'm a big fan of one page simple. You should be able to show me on one page what's going to happen. Where am I pulling money from this year? What's my plan moving forward? These plans should not require a lot to understand with that. If I were to pull out my blueprints to a house and look at that, there's a lot of things on there. But if I sit there and I look at the plans with an architect or with the actual person that's building the house, they can make it simple by walking me through and explaining exactly what I see. What do I care about? I care about the end result, that I get a house that is comfortable and it's going to stand on a firm foundation. Am I really concerned about how everything goes together? Not necessarily. So the plans need to be simple so that I can understand, but even more so, I need to have someone that can explain them to me in a way that I understand so I can take advantage of it. So that true retirement income plan, it needs to be that simple thing. And I need to know, where's the income starting and where will it come from? In what order do I pull from it? How is it going to grow? What return am I having to chase to make this happen? Does it account for health issues? What if I get sick? What if I need long-term health care? How's that going to happen? What if I pass away early? Is my spouse going to be okay? And how long is the money going to last? That last one, that's the one that I get number one. Doesn't matter. Time and time again. And with those questions, you're not alone. You're not alone. And when we visit with people week in and week out that they've been working with somebody for years, they might think that they have a true written retirement income plan, but when we actually meet and go through this, they realize, you know what? I don't have this. I've never seen something like this before. This is incredibly valuable. You're not the odd man out. It's not your fault either. I told you with their industry, a lot of people, they've never been experienced to having to do this for folks. So they don't know how to develop that spin down plan. They haven't retired somebody before. We're retiring multiple people every single year. So we're sending checks out that people are counting on to live on to make sure that it's going to work. So the third step, as far as what I'm going to offer for you tonight, is actually getting a written retirement income plan so you can quit wondering when it comes to income. What does this have covered into it? It's going to be in easy terms that you can actually understand, so that way it makes it simple for you. And we can see, where's the money coming from. We can finally put to rest, do I really have enough? Am I on track? Because we're going to have tested that mathematically and ensured you that you can actually see that, how long your money's going to last, and exactly how your plan, if you just keep doing what you're doing, how's it going to work out? There's plenty of other things on your mind right now. You might be going through job loss and trying to find where you can work again. You might be dealing with trying to figure out, hey, if I've got to homeschool the kids again this fall, holy cow, I don't think I can survive. Whatever it might be, let's not make wondering about your income one of those things that you're worried about. Click the link to the side so we can schedule that 15-minute phone call and just help out with that. And if you're worried about what it's going to be, what we're going to cover, like I said, this is not a sales conversation. This is just us offering help. And granted, we would love that if it makes sense from this conversation, we'll schedule a follow-up meeting with you. In that follow-up meeting, that's where we're going to be going through and figuring out more so if we're a great fit to work together. Yeah, this is your retirement nest egg. This is your life. I want to make sure that you take it just as importantly as we do if we come alongside you to help out. I treat everyone with this that's going through it the same way as I do my mother or my father as they come up on retirement themselves. This is something that you don't get a do-over. So if I look at that and I say, how do we make the biggest impact for you? I'd like to tell you, just take advantage of clicking the button so that we can schedule that 15-minute phone call and help you out with your individual questions. This isn't something that we do as a cookie-cutter approach. We want to make sure that we handle your unique circumstance and situation. From that conversation, we'll decide, does it make sense to meet together over a video conference on Zoom to have a follow-up meeting? That meeting normally lasts about an hour with that second meeting. And that's where we're really going to get down in the meat and potatoes of what's going on and where we feel like we can help you. You can also do that here in person at our conference room. We've been open the entire time through the pandemic as we were considered essential activity, but if you prefer, we can do either way. After that, we feel like you're going to have enough information to make a decision. Does it make sense to work together with us as a client? But we decide to give first so that we can make sure that we're providing value to you, and then you can make an educated decision of, does that make sense? You know, Mary had sat on one of these conversations about a year ago, and we got to the end, and she had scheduled the 15 minutes, and she said, you know, I need to reschedule. I'll get around to it later. And I called Mary a few times after that just to kind of check in. She kept saying, I'll get around to it later. I'll get around to it later. Well, when we entered all of this, I just called Mary again just to see what was going on. Unfortunately, Mary had lost her job at that point. She had no plan. She'd lost a sizable amount in her portfolio, and she didn't know where to start. She said, now I've got 400,000 reasons of why I should have went ahead and took action. Don't be like Mary. Let's go ahead and take action. Click the button so that we can help you out with designing what your future is going to look like. Start today. Start today on making an action, taking that action, making a difference of what your future is going to be. Start today so you can figure out what is going to be your path. What risk are you taking on in your portfolio? Start today so we can see what we can do to make a difference on taxes, so you can be giving more of your hard-earned money to your family, to the organizations you care about, making a difference with that, making an impact instead of giving it to the IRS. And start today so that you can know where your money's coming from year after year after year. I want to thank you for logging in tonight so that we could share this information with you. I hope it was helpful. If it was, then I want to make sure that we're able to take advantage of sitting down and helping you out. If you've watched this entire presentation, I want to give you a special bonus. That special bonus that I'm going to offer to you is for us to go through and help you out with designing all three of these pieces. So not just one of the three, all three. So if you're still watching and you want to take advantage of that right now, be sure to just put special offer in the notes of that scheduling link. And we're going to take advantage of doing all three of those. So I just want to make sure that I'm doing everything in my power to help you out. I care about this Orlando community. I care about you the same way as I do my own mother and father that are going through the same situation right now. This is real. This is wanting to make sure that you're making a difference for you. So take advantage by clicking that button below so that we can schedule a time to help you out with your questions. I thank you and wish you a good night.